Institute. Today we are going to do a real-time problem. This is Accounting for Non-Profit Organization, Class 12 syllabus. We are learning how to prepare an income and expenditure account. So let's start with looking into a real-time problem. So this is the way you will get a question in the question paper. You will be given a balance sheet of the previous year and the receipts and payments account for the year. You have to calculate the income and expenditure statement. As you can see, balance sheet as on 31st of March 2017. This is the balance sheet of Golden Sports Club Vijayapura. So it's a sports company. Okay, um, it's a club basically, and the receipts and payments account for the year, which is 18. As you can see, 1 year. This is for the year we need to calculate. So similarly, they will ask in examination, prepare an income and expenditure account for the year 2018 and the balance sheet as on that date. So the first thing is we need to learn how to read a question paper. So that solves most of the problem. Okay, first thing is that let's uh, from the receipts and payments account you have to create an expenditure and an income account. So whatever goes here, barring a few, will have to be reflected over here, have to be entered over here. Okay, and whatever you get over here, you need to add them over here as an income. But there are few conditions. That's what we're going to see and learn. Okay, so the first entry we can see is by salary 25,000. So whenever you get an entry like this, go down and see in the adjustments area if there is an outstanding entry of the same head, that is salary. As you can see, 25,000 we've already paid and we have to further pay 5,000, and this is of this year. So therefore we need to write this amount and add this amount. Okay, then you will have to go into the balance sheet and you have to see if there was any previous year's outstanding. So from this 25,000 we have paid this 7,000 which was outstanding of last year. So therefore we have to minus this amount. Let me show you the flow chart. So if you've not seen my previous video, you can go ahead and see it, but for quick reference I will show you the chart, the flow chart. Okay, so let's take salary. So step 1, you will ask yourself, is it a capital expense or a revenue expense? It is a revenue expense. As you can see, a tick over here, right? It is a revenue expense, that's why I've given a tick. Not that because I have given a tick it became a revenue expense. It's not that way. Anyway, so and then the second uh, question you need to ask is there any this year's outstanding salary entry in the adjustments? So which I showed you over here. You need to come down and you will see, okay, yes, there is an entry in the adjustments. All right, so if that's the case, you add both this item, you will write it in the inner column. Let's go ahead and do that simultaneously so everything gets cemented. So I write salary and I write 2018 and I write, okay, one second, 2018 and that is 25,000. So you can write it in the inner column. So this we can further, okay, I'll just control D. This is for faster work. Outstanding for 2018. So how much was the amount? Let's go and look into it. Don't always don't rely on your memory. Always check it to be 100% sure. It's 5,000. So outstanding, it's 5,000. Let me remove this. So we have to write add outstanding of this year. Then you less outstanding for last year. Okay, so that is 7,000. But let's reconfirm. As you can see, 7,000. So all right. So now the fourth step, what we need to do is, that's the third step. The third step is there any outstanding salary entry in the balance sheet? Okay, so there is. Yeah, so let me reduce this a bit. Okay. Yeah, we just need this part. So we're actually working on 3 documents. So let's have all 3 documents one next to the other so that we are able to. Yeah. So this is the third entry. Outstanding salary 7,000. Okay, that you need to minus it. This is salary amount from the payments from here, salary amount from here. Then this is plus outstanding salary amount from the adjustments, which is from here. And then you minus, the third entry is minus last year's outstanding salary, that is from the previous year's balance sheet. And then once you're done with this, the fourth step is calculate and write it in the outer column. So we'll calculate 25,000 plus 5,000, that is 30,000, minus 7,000, that is 23,000. So this you need to write it in the outer column. So that's done. Now let's look at the next entry, sports material. So let me show you treatment of sports material. Okay, now you need to again ask, is it a capital expense or a revenue expense? It is a capital expense. Okay, so since it is a capital expense, you directly ignore that entry. You directly ignore that entry, so that this is a this will come in the balance sheet, but in the income and expenditure account, you just need to ignore it. So purchase of sports material, so we are not interested in this entry for now. So let's go to the next one. Now, by investments, we know that it is money which we have put into somebody else's business in order to get some profit or dividend or whatever. So for that reason, this is not part of the business. So this is also a balance sheet item, and it is nothing to do with the expenditure for this year. Let me show you. I think I might have, yeah, investments. As you can see, investments, fixed deposits, bank loan. It's a capital expense, so you just ignore that entry. You see, we've finished 3 entries now. How quickly it is going. By postage. By postage, it's a for generally for postage, electric charges, upkeep of grounds. You will not have any adjustments over here or in the balance sheet, but you need to check it. So these are the entries which do not have a corresponding entry in adjustments or the previous year's balance sheet. Let's uh, make sure. Postage, electricity charges. Can we see any word over here? Postage, electricity charges? Not that I can see. Any previous year's electricity charges or postage? No. So we are 100% sure. So if that's the case, let's see what we need to do. Yeah, so if that's the case, let me, yeah, so let me increase it so you can see it more clearly. All right, so this is a revenue expense. First thing, Every time you need to ask yourself this question: is it a revenue or a capital expense? So it is a revenue expense, and it does not have any other entries in the adjustments of the balance sheet. So directly you enter it in the outer column. Okay, so let's see, by postage 400. So we'll directly go postage. If you want, you can leave a line, or you can write it one next to the other. Just for it to look good, I hope this is more visible. Yeah, so just to look little more visible, I'm just leaving a line. Otherwise, you don't need to in your exam. The next is electricity charges. So electricity charges. Directly write it 1600. And then upkeep of grounds. So these type of expenses, they are maintenance expenses. So this also will fall under revenue expense. Okay, so I'm not showing you the flow chart because it's the same thing we are doing it, so I don't think so there is a need for it. So let's keep up the time also. So it is 6500. Okay, now this balance carried down, this is a cash in hand. That's the cash that the company has got at the end of the day. This is an entry which you need to ignore completely. It's a balance sheet amount which I will show you when we reach balance sheet, but as of income and expenditure statement you need to ignore this entry. Okay, so then outstanding subscription, this is related to income. Outstanding salary, we've taken care of it. Entrance fees to be capitalized is again when we are discussing income, I'll discuss this. Depreciate sports material at 20%. Okay, so here there is an important thing, depreciation. Now you can see there is sports material here as well as over here. Okay, now let's go to depreciation and see what's the case. So let me reduce this and increase this. Okay, so in depreciation account, whenever you have depreciation account, the first segregation or division that you can make is the depreciation amount given in the adjustments or percentage is given. First go and check that. So here percentage is given, that means you need to calculate the depreciation amount. Okay, so now let's see if there are any other types. Yes, there are three types. What are they? There is no asset entry in the payments account. Whichever asset you're trying to do depreciation for, is there any entry in payments? Now over here, yes, for sports material there is an entry, so that means it is this part. And does it have a date? Yes, it also has a date. So there are three categories. One is there won't be any asset entry in the payments, that means sports material wouldn't have been here. Or the other alternative is it would have been given but there is no date given. But for us it is the second category that we are interested in. So asset entry is also there and there is date is also there. So if that's the case, what you should do, we should calculate, let me increase this, calculate using percentage in adjustments with the asset value in last year's balance sheet. What is this telling basically is you take this 35,000 and calculate depreciation based on this percentage. Let's do it. So I'll mention depreciation. Yeah, so you write sports material, and how much is that? 20%. 20 divided by 100 into, that is, one second, yeah, 35,000. So for ease of calculation guys, you can use a calculator, but ease of calculation in order to save time, if it's got 10%, you just remove one zero. If it is 20%, remove one zero but multiply this 35 by 2. I know 35 into 2 is 70. So 0 0, that is 7,000. If it is 5%, divide it by 2. Remove the 0 and divide by 2. These are tricks to do time management in examination. So we've calculated 35,000 for this, but we also have to calculate depreciation for this 18,000 as well. And now since the date is given, so obviously you cannot calculate for 12 months because we bought the sports material on in the month of October. So for April, May, June, July, August, September, you cannot calculate because depreciation happens if you have the goods in hand. So since we bought it on October, so we have to start calculating from October onwards. October, November, December, January, February, March. So that is 6 months. So we use the same formula. This time what we do is, preferably guys, I would say write it in the inner column. Let me do one thing. Let me add one more. Let me write it here. 2017 sports material. Okay. So for this, the value is 7,000. And I'll just take this. I'll take both, in fact. Copy them. This is 2018. And this is, let's calculate and then I will change it. 20 into 18,000. Now this is another important thing which you need to take care of. You write the number of months and divide it there by 12. Okay, so 20% of 18,000, I know it's 3,600, but we have to divide it into 6 by 12, that is half, because 6 goes in 12 two times. So 3,600 divided by 2, that is 1,800. So you write the calculated amount outside, 8,800. Sorry. So we are done with the payment side. Now quickly let's come to the income side. Okay. So I'll move it over here. And now this balance brought down is the cash in hand which was there at the beginning of the year, which we need to conveniently skip this entry. We don't need to take this. Starting from your subscription, we do the same procedure as we did over here. We go down and check if there is any outstanding subscription for this year. This we need to add it, and last year's, if it was there, we have to minus it. Yeah, last year we had received